Hello, everybody, and welcome to the Trading with Ashley show. I want to personally thank you because I know all of you worked really hard to help me get to my goal of 50,000 subscribers before the end of August. And we did it. We crossed over that threshold yesterday. So I'm very excited about that. And thank each and every one of you for doing your part to make that happen. I did have one special member that I wanted to thank. I know she worked really hard to get the message out to all of our friends and family to join so that we could cross over that threshold. And it is an exciting moment for a YouTube creator to actually get to the point where I have that many followers. And, it makes me really proud. I'm very humbled by it. But the main thing is I want to celebrate with all of you to ensure that I'm expanding my reach even further to teach people how to trade. So in that spirit, I want to reintroduce you to my new trader network. Now, as most of you know, I run two Discord communities. One is the larger Discord community, and I'll have a lot of you that are my viewers that are already in that community. That is a community for individuals with an account about $10,000 and above, and those individuals actually know a little bit about trading. They just want to take their trading to the next level, and they want to see 100% of my trades so that they can get a better sense of how I operate and how I think. But I do have a smaller, much slower paced Discord community called the New Trader Network, and we are enhancing this New Trader Network to ensure that we constantly have individuals available there to help you learn how to trade. So we just started adding a new feature to that. We have live calls with a TWA coach, and it's going really well. People are really starting to pick this up, having that hands-on experience with live coaching calls. So I want all of you that are interested to know that I have this other community that is a perfect place to learn. I personally call out one trade per week because it keeps things slow. You don't have to constantly watch your computer. My coach calls out a play a week. And now I am starting a trading challenge within that community. So let me tell you a little bit about the trading challenge. This is going to be a put credit spread trading challenge. Trading credit spreads is perfect for a smaller account because it does not take near the amount of capital to trade credit spreads. So you're in luck because in this video, I'm going to show you exactly how to build a credit spread. I'm going to show you when to take profit on a credit spread, and I am going to show you when to cut your losses on a credit spread. Now, after I show you all about trading credit spreads, if this is something that you're interested in and you want to be surrounded by like-minded people that are on their learning journey, then consider joining my New Trader Network. I will leave it as the top link in my description. You don't have to speak with anybody. It's a direct link to join the New Trader Network Discord community. I cannot wait to see you there, and we will do everything in our power to ensure you learn how to trade. And once you feel like you have your arms around the different trading styles that we use and you're ready to kick off those training wheels and join the larger Discord, will be available for you when you are ready. Okay, let's get into the detail about credit spreads, what they're all about. Let me tell you, one, why I love credit spreads, and then I'm going to tell you what you need to watch out for when you're trading credit spreads. So the first thing I love about credit spreads is it just does not require a lot of capital, and all ticker symbols are available to you. As long as there are active option chains, it really does not matter the price of the ticker symbol. Because when you do credit spreads, you are only responsible for what's in between your two strike prices as far as needing that amount of capital to trade. So that's why these are so popular, because it doesn't force you to just trade lower priced tickers. The other thing I like about credit spreads, it's the return. The return is usually pretty significant. You will usually make anywhere between 10 and 25% in a matter of about a month. And that's really great if you are trying to scale a smaller account. But, now there's always a but, I want you to be cautious. I want you to ensure that you are not taking too much risk when you're trading credit spreads. You need to ensure you don't get too close to the sun. That's what I always tell all of those that are trading credit spreads. Meaning you want to ensure that if you've started it off with 2 or 3 contracts, that suddenly you don't think this is just the holy grail for many, and then you up it to 10 and 20 contracts. Because if you lose, say, one bad trade with 10 contracts, it will wipe out 10 weeks worth of gains where you just did one contract. So you need to be super careful. There is a conservative way to do these that gives you the edge on credit spreads, and I will be teaching you that. With that being said, let's jump into the computer. I'm going to show you how to build a proper credit spread, and then once you have it open, what to do with it. We're going to get started with looking at the technicals on a stock that we want to do a put credit spread on. And I'm starting with Palantir because that's a real popular stock that everyone seems to be interested in. And it's been frustrating for many that don't have a larger account. They've been unable to get in on the price action. So I thought this would be a great place to start. Now, put credit spreads, the entire goal of the spread is for it not to breach the sold put strike. So to ensure that we're selecting the right strike, we are going to look at the technicals on Palantir. Now, Palantir has been under pressure lately. It was all the way up here at 190, and then in several days of action, it fell very quickly down to where we are right now. So what we want to do is see what is a strong level of support for this stock, because remember, the goal is that we do not get to our actual strike price that we sell. So if we look right here at the Bollinger Band, we see that the bottom of this band is at about 145, and the RSI is under 50. We're at 47 right now. So when that happens, we definitely want to shoot for the bottom of the band for a potential strike. So if you were just selling puts and you had the capital to do so, then I would go for something around 145 right here at the bottom of the band. But because we want to take an extra measure of safety, I want to go even lower for my credit spread. So I'm going to look for the next level of support. Well, naturally, I'm looking right here at this 137. This is the 100-day moving average. Now, this might be a really good strike price to hide behind. And I say hide behind because remember, the goal is for it to bounce off of a level of support and not get to our strike. So 135 gives me a little bit more protection, and I'm going to start my trade at the 135 mark for all of you. Once you get to the option chain, the first thing we want to do is select an expiration date. So let's look right up here. We're currently close to the 8/29 date. So we want to go out. Let's go out maybe right here to the mid-October date, 10/17. This is going to be beneficial to those of you that are learning because if you're doing a trade that's a little bit further out, you don't have to stay glued to the computer watching it. And this allows you to see the price movement and how it affects your trade. So if you go ahead and scroll down here, we want to look at a decent strike price to open our trade. Well, we've talked about that 135. That's offering a little bit level of protection. So we might want to start this trade even safer right there at 130. Let's check our deltas to see the likelihood of it actually getting to 130 by our expiration date. The delta is 0.14, and this is really good. I like to shoot for something under 0.20, and this fits the bill. So I am going to sell this strike, this 130, and it is paying $291 a share. Now, even though we're selling the 130, you actually don't need $13,000 to back up the trade because we are going to buy a put as well. So let's look at those opportunities. You see right here, 125. I'm going to actually go 10 strikes wide to the 120. This is the one that I am going to buy. So this is going to reduce the amount of capital needed for this trade to $1,000 because the way that you determine how much you need for the trade, you take the 130 minus the 120. This is the one you're buying, and that's 10, and you multiply that by 100. So when I send it to a ticket, you'll get a better sense for how the trade is built and how much we might make from the trade. Once you send it to a ticket, you go ahead and you populate. If you're going to do one, populate one contract for each of these. And then you want to change this to net credit because this is a credit spread. We are selling one right here, the 130, it's paying $291, and that is higher than the one we are buying right here, the 120 at 174, and that's what produces this credit. Now, when you populate this right here, you can put in a higher amount than what it's currently paying, and with the movement up and down, a lot of times it will get filled. So let's just put in 115 right here. So when you preview it, you'll get a better sense for what's happening. This is going to require $1,000 to place this trade, but look, we're getting $115 in credit for the trade. Now, if you look down here, the reason this does not say 1,000 is because you are getting credit for the 115. But when you put on the trade, you will want the $1,000 in there, and you'll immediately be paid this premium. And so once you put this trade on, then you just let it work itself out. We watch it and monitor it, and you can decide at what point it's a good time to exit. Now, let me tell you what a decent time to exit is if you're following certain trading rules. A lot of times, if you receive like this 115 right here, a lot of traders will like to exit the trade once it's at 50% profit. So in that situation, you would take the 115, and once this 115 has whittled down to 57 cents, then you would do the opposite order, and that would be a net debit at that point, and you would give back half of the 115 to exit the trade early. And the beauty of that is once you exit the trade at 50% profit, then you don't have to worry any longer about it breaching any strike price, and you can move on to another trade and look for a similar setup. Now, what if the trade works against you? Well, that does happen sometimes, and when it does, you have to consider right here, if you received 115, usually most traders will tell you once this has doubled, so at that point we would be at $2.30, that would be a time to exit and look for a better trade, a better setup. So you would give back the 115 that you just received, then you'd add another $115 to it, and then that would be what's considered a 100% loss because you were paid 115 and now you are giving them 115. So we want to try to select strike prices where we can avoid that outcome, but you can do it automatically or you can manually watch it. A lot of times, if you are just doing one trade every couple of weeks, it might be worth just watching it because if it's starting to approach, let's say it approaches that 135 strike, it may very well bounce off of that level of support, and then this trade would expire 100% worthless, which you'd be able to keep the entire $115. But that's something that we would work through. If you're part of the community, we would work through that together, and I would explain it along the way. But that's how you build them. Let's go ahead and do one more. This time we're going to work with the NASDAQ, the Qs, and let's see how we can build a credit spread on the QQQ. Here we are looking at the technicals on the Qs, and we are in a bullish mode right now. We are over 50 on the RSI. So when that happens, we usually look right here at the middle of the band. Well, we're sitting at the middle of the band right now. So with that being said, I think I'd want to definitely take a measure of safety and go down to the bottom part of the band for an entry. So if you look right here, that's right here about 556. But remember, I want to be a little bit safer, so I will more than likely go down below 550 for this trade, or maybe even lower if I can get a good entry. Let's go look. I'm going to stick with the October date. We're going to go to October 17th to take a look at what they are offering. When you get to the chain, again, you want to go over here to the right for my puts. And 550 was a starting point to consider, but let's look at those deltas. That delta is a little aggressive. It's a 0.25, and remember, I like to go below 0.2. So let's scroll down here a little bit more and see what we have. Look, right here at 538, this might be a really good spot and considered a safer trade to open up this trade. So I'm going to sell this one, and then depending on how much capital you're working with, you can do a $1 wide spread right here, or you can go $5, 10, but I'm going to stick with the 10 with that $1,000. So I want to go down here to 528, and then I am going to buy this spread. Now here we are again, a very similar setup as our other trade on Palantir. This one I'm putting in 115. It's currently paying 111. And here you have the same exact scenario that I just showed you, but this is with the Qs. So it won't always work out to where you're getting $115, but these two trades sure did work out that way. But when you are doing this, depending on your budget, you can adjust these number of contracts to your level of conviction in the trade. So let's say I was working with 5,000. When I adjust that accordingly, you can see it would require $5,000 to put on this trade, but look, I am making $575 on the trade. The same rules apply on exits and determining when to take profit, but this gives you an idea of how it can flex based on your actual account size. I hope you found that inspiring and you're now ready to trade. If you are interested in hearing all of my signals for the New Trader Network and joining our challenge, click the link below and I will see you on the inside. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, I know you're all pumped up and ready to learn, so I picked out the perfect video to keep the learning going. You can watch that video right here.